With the S&P 500 being up so much over the last year, it's becoming harder and harder to find amazing opportunities in the market, especially amongst amazing companies trading at a discount. But I did find an amazing one for today, and I can't believe this stock is still trading at this valuation, and it's very misunderstood. Again, I can't believe it. Either I'm missing something here, or this is one of the best opportunities I've seen in a long time. I'm gonna talk about it again because I did talk about it a few months ago, and I really hope you enjoy this video as always, and it might surprise a lot of you. And this stock is Uber. Uber is only up 6% over the last year. It's massively misunderstood. It's loved by many investors, but it's also hated by many investors, mainly, Tesla shareholders, because of the autonomous vehicle drama around Uber, which I believe is massively overblown. And this is an area where Uber will benefit from. It will not hurt the Uber business model as much as a lot of people believe. I'm going to talk about all that stuff here in the video. Now, if you remember back in 2018, Uber was one of the hottest IPOs back then. It was very hot, and it was a money-losing machine. They were not doing anything good. But this is a very different company. Like in 2020, they were losing 3.3 billion. Now they're making 7.7 billion in positive free cash flow. It's just a massive, amazing turnaround story. And everything has been growing rapidly for the company. Everything's been getting better. Monthly users, 161 million monthly users. Trips, they're up 17% year on year. Everything's been growing. Total booking in terms of gross booking is around $40 billion a quarter. This is over $160 billion annualized. So $160 billion is flowing within the Uber app every single year. And imagine what Uber could do to monetize all those members, 161 million every month. Almost $160 billion a year. I mean, they could do so much to monetize them. And this is why profitability has been increasing so much. And it's only getting started. And they've been expanding in so many different things. I'm going to talk about some of them here very shortly. Revenue growth has also been very good, up 22% year on year. Adjusted EBITDA, up 55% year on year. Yet the Uber stock is only up 5 or 6%. It's very funny. And again, it's all because of the Tesla autonomous vehicle drama, which I believe is a misunderstood story. And those are normally the best opportunities in the market. Whenever something, it's just whenever a stock is going down because of a reason that's not presented in the income statement, and it's a reason that could be valid, but maybe not before 4 or 5 or 7 or 8 years from now. And I'm just loving it. And I always made money buying that stuff. So we'll find out. But for their balance sheet, they do have a lot of interesting equity investments in a lot of amazing companies. One of them is Grab. Grab is like the Uber of Southeast Asia. And just go look at the growth metrics of Grab. It's rapidly growing. And that will be a very successful investment, in my opinion, very valuable investment. I believe they own 13 or 16% of the overall company. So that's an amazing one. They also own Didi, which is the popular ride-sharing app in China, I believe. They also own Aurora, which they're working on an autonomous semi-truck, and they're going to start rolling out this year. They also own a stake in Joby Aviation, and that's mainly within air taxis. They're rolling out in Dubai this year. So they have a lot of interesting equity investments other than a very decent cash position. But you don't only get all that stuff. You don't only get the Uber ride-sharing business and deliveries and all that stuff, but you also get the Uber One program. And Uber One program has over 25 million right now, or 70% increase year on year. And this is what the CEO is working on. The CEO is working on building Uber in what he calls a super app. A super app that's used to pretty much deliver and move almost everything, not just with freight. Their freight business is about to turn profitable, but in deliveries of groceries, their grocery deliveries has been massively picking up. Other deliveries, Uber Eats, been massively picking up for pet food and other stuff. Massive growth over there. And the ride sharing too has been massively picking up. And whenever you have that membership of the Uber One, 25 million members, 161 million monthly users, and you have over $160 billion flowing in the Uber app every single year. This is massive retention. And there's so much you could do to monetize those users, cross-sell them different services, and expand the Uber app into a super app. And the CEO is slowly doing it. And that might be a funny one, but a few days ago, and Uber Eats and Home Depot, they made a partnership. And I know it's funny because it's Uber Eats, and then you have a home improvement store. It doesn't make too much sense, but it's mainly the delivery app. And I think it's pretty smart. So if you want anything from Home Depot, I should say, maybe paint or whatever, and you want to go pick it up or anything, and maybe you're at a job site or whatever, someone has a truck or something, and you could just go on the Uber app and they bring it to your house. So this is how Uber is expanding within people. And Uber is a word like Google. People say, get an Uber. They don't say get a Lyft or get a taxi. They don't even say taxi anymore. Everyone says Uber, just like they say Google, whatever, they say Uber. And it's being ingrained in people's heads with all those people, 25 million Uber One members, 161 million users, and they can expand it to so many different areas. And this is the potential of Uber that a lot of people are not talking about. Now, for the autonomous vehicle stuff, it's happening right now. But I believe ultimately most autonomous vehicle companies and the air taxis, future kind of stuff, most of them will likely partner with Uber. Why? Because they get access to the easy process of Uber. Uber has a lot of experience with checkouts, with insurance on different things, handling many different charges, handling things that are lost. Everything, it makes it much easier for those autonomous vehicle companies. The second reason why, and this is the main reason why, is they get access to the Uber ecosystem. Why would they go and start their own apps? People don't want to have 200 or 300 apps. They love the Uber app. So if a company like WeRide, for example, which is a popular one outside the United States, they announced an autonomous mobility service in Abu Dhabi, and it's going to be exclusively available on the Uber app. And that's going to start this year in 2025. They're going to get access to the 161 million worldwide people every month that use the Uber app. That's going to make it amazing for them. And the third reason is that's those two things, they complement each other, because until they get really rolled out, like even the Waymo stuff, and Uber does have a partnership with Waymo, they're going to expand this year in 2025 into Austin and Atlanta. And that's only going to be available on the Uber app. And the third benefit that the CEO talked about is people don't want to wait forever for a ride. So let's say people, for example, they love taking a Waymo, okay? And let's say Waymo has its own app. Waymo does not have as many vehicles available as Uber. They have like 10,000 or 8,000. And it's going to take years and years for them to have so many that there's like the average wait time is like 4 or 5 minutes like it is on Uber. Like with Uber, it's very quick. Sometimes it's like 5 minutes or 4 minutes. With Waymo, it could be 30 minutes to an hour. No one wants to wait so long. But with the Uber app, people have an option. For example, if a Waymo is not available, they say, okay, but I need to get to this appointment. So I'm just going to get whatever taxi or whatever, someone else that can come and pick me up. And it would reduce the wait time. So those things, they complement each other. They can't really be separate. So it's going to be very hard for those companies to do them on their own. And that's why one of the most popular ones, Waymo, which is owned by Google, has decided to partner with Uber to go into massive cities like Austin, Texas, and in Atlanta, Georgia. And they're going to go in 2026 in Miami with a company called Move. And this is another misunderstanding by the market, where people believed that Move, is like different from Uber. And that means that Waymo is dumping Uber. And this is not true. You go listen to the last conference call. The CEO talked about this. And he said they own Move. They own most of the company called Move and have 5 or 6 seats on the board. So they pretty much control the company. And this is just one of the companies that Uber own. So they're still going on with Uber, and this is amazing stuff. And the last benefit I'm going to talk about is all those autonomous vehicle companies. They're going with Uber. They're not going with Lyft. So if they're going to hurt anybody, they're going to hurt Lyft. And they're going to take, when Uber's going to take market share from Lyft. So again, all those things, the autonomous taxis or whatever, flying taxis in the future, autonomous vehicles, all of that, Uber is a bet on all that stuff. Yet people are selling the stock because they believe that whenever Tesla rolls out their autonomous vehicles or whatever it is, that they're going to have 100% market share. This is not true. Tesla is not going to have 100% market share. And they might not partner with Uber. They might have their own app. And that could be somewhat of a challenge. But it's not going to be a challenge in a year from now, 2 years from now, even 5 years from now, for them to roll out enough cars for them to be able to lower the average wait time that Uber has on its app, which is like 5 minutes or whatever it is. It's very low. And the last partnership they have, and this is just a few days ago, is with NVIDIA. And this is only stock. They got a partnership with NVIDIA, and the stock went down. This is how bad the sentiment is on Uber from people believing that Tesla is going to kill the business model. And they partnered with Uber to accelerate autonomous mobility. And this is what the CEO said. He said millions of trips occur every day on Uber, representing a vast and rich source of data that companies will look to pair with the NVIDIA Cosmos platform and NVIDIA GDX cloud to help autonomous vehicle partners to build stronger AI models even more efficiently. Now, I'm going to be honest, I'm not sure how that's going to work out. They said they will share additional details later this year, so we're going to find out. But I'm sure it's some kind of a partnership with NVIDIA, where NVIDIA gets to access the data of Uber, which Uber has very valuable data that apparently NVIDIA sees as valuable. And likely, Uber will be getting some kind of royalties from NVIDIA for giving them access to the data or the platform or whatever it is. So all those companies are partnering with Uber. And, and Uber is a bet on all those futuristic stuff that people are talking about. You don't have to pick winners. If you pick Uber, Uber is a platform. They're all going to be on Uber. They're not going anywhere. And again, I just find it funny that the stock is trading at 20 times cash flow. Very funny. I mean, I have to be missing something. Or again, just everyone is smart and I'm not. Maybe I'm missing something. But 20 times cash flow for all that stuff, for this business model ecosystem, all those users, it's really not expensive, especially in this market. And Uber is expected to massively grow cash flow from $6.5 billion to $12.6 billion by 2028. I believe it will be much, much more than that, just being honest, which is around 25% growth per year. This is what the analysts are expecting. Now, I'm going to give you a short-term outlook and longer-term outlook, okay? Now, the mean PE for Uber is around 25 times cash flow. And the main reason why it went to around 20 times cash flow is because of the whole drama around autonomous vehicles. And normally, from my experience, once that happens, there's normally some kind of a catalyst that could cause a change in sentiment for people to realize, like, oh, maybe Uber will actually benefit from that stuff. But if Uber doesn't benefit from it, if it did end up hurting Uber, it's not going to be in 1, 2, 3, 4, 5 years from now. And that will only happen if Uber posts amazing results on the next earnings report. So if Uber does post an amazing earnings report, I think it could be a wake-up call for the market, and Uber could get back to their market cap to free cash flow multiple of 25 times cash flow, which I believe is fair for a company like Uber with the growth, with the platform, with the moat, and with the future that they have, the partnerships, and everything else. And I don't know how much they're going to make with those AVs if they're not paying the drivers. I mean, it could be very profitable. I don't know yet. So we're going to find out. But this is what I'm expecting from Uber. Okay, and they're expecting in 2025 $7.7 billion of cash flow. I believe they will exceed it, but let's assume they do reach the $7.7 billion of cash flow. And this is just a quick valuation model where I'm taking the $7.7 billion of cash flow expected for 2025, and then I'm gonna time it by 25 times cash flow, assuming we get the change in sentiment after the overblown thoughts and you could say drama around autonomous vehicles. And that would take Uber to $192 billion market cap. The current market cap is $142 billion. This is around 35% on the upside. So in other words, once this whole drama disappears around autonomous vehicles and people realize that either it's going to massively benefit Uber, or maybe it's not going to really happen anytime soon when it really hurts the business model so much. Or maybe the NVIDIA partnership is some kind of a game changer product that's going to bring in a lot of revenues. We don't know. There's a lot of up catalysts for the company. But this is 35% on the upside this year if we do get to change in sentiment in Uber. Okay, and now the company has started buying back stock. They announced the $1.5 billion share repurchase program. So the earnings per share metrics, they look a little bit better. They expected 16% this year, 28, 31, 21%. And it's really, for me personally, if I had to look at it, even on a free cash flow growth perspective, I would expect at least 20% cash flow growth from Uber for many years to come. and it's now trading at 20 times cash flow. I do not expect a multiple contraction. I am expecting a multiple expansion. But without a multiple expansion, if Uber only gets to 20% cash flow per year for the next 4 to 5 years, I'm expecting, on the low end, you could say, an annual return close to the free cash flow growth of around 20%. So I would expect 20% a year on Uber for the very long term. In the short term, if we do get to change in sentiment, if Uber does deliver on earnings, and I'm expecting them to, we'll see what happens, up to 35% this year. And that's just what I'm seeing on the stock. Maybe I'm wrong. You could do your own research and find out for yourself. But this is just my opinion on Uber, not financial advice. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I'll talk to you in another video.